I'm going to move into my charts here on light crude. And this is the weekly and daily chart on the light crude market. And you can see that it's been really, really weak and getting a rebound now. So what am I looking at here? Let me just get these pointers up here. On the weekly chart over here, you can see here, this is where momentum went negative. I have it listed right over there. Here's where momentum went positive right over there. And the same thing happened right over here. Now, what is that? That is our reversal scout. That is one of the best ways to understand momentum using that level 4 proprietary indicator. And you can see in here, it is still negative momentum. Once it turned negative here, it warned us that this cycle had turned down. I'm going to blow this up a little bit more for you to see, and I'm going to go out a little bit further, and you could see these cyclical rhythms that are in there. They're right over here. We're looking at the cycles in heating oil and in gasoline, and they line up really perfectly with the light crude market. And let's just look now at these last two cycles right there again. And this is where it's moving down. And we have a note in here that our daily trough, in other words, the decline that the market is in the short term showing us, is likely to bottom either late June or somewhere early July. So we're looking for lower prices in here. Now, you can see it got good support here in a rebound in the 72.5 area. It's pretty likely it's going to come down and test that again. So this rebound in here, I believe, is false. So when I look here at the daily chart right here, I'm looking at what looks like a likely decline right now. And usually, when you get this rebound right over here after the sharp break, now I want you to see that this is where the cycle low is. And I wasn't really sure which of these were the trough, in other words, the low of this cycle period right here. And then we got the rally in here, and it looked pretty clear that it was right over here. Could have been right here. I still don't know, and it doesn't matter. Once it gets underneath this level, it's negative, and you can see it accelerated to the downside. Now, resistances are way up over here, and that's for this big decline there. That's not that important right now. Often what happens is that the slim ribbon, as you can see right in here, and this is a free indicator that you can put up on the Thinkorswim platform or Wealth 365 charts or Trading View, Tasty Trade, all of those have it. And if you want to put it up on your Thinkorswim, you can get the script from us, just write to us and we'll be able to give you that information. This is when it comes up, usually it comes down to the level, comes up to the level where it broke down from, which is in this case right in the slim ribbon. See how the slim ribbon gives support right in here, and you can see how the slim ribbon gave resistance right here. Also on the bottom is the slim ribbon PO. This is a level 4 indicator. And you can see where it gives you these upside arrows that says resumption to the upside. In other words, momentum is strong and likely to continue to the upside. Here you could see in here momentum negative and likely to continue to the downside. So once it gets up over here past the 25 level and then turns down, it'll give you another down arrow. So my trade setup right in here is to be a seller somewhere up in here. You can see where it gets, where there's a resistance on this a megaphone type formation. It gets back up to that downtrend line or to this level here. So somewhere in this high 75s to high 76s is kind of my favorable entry zone right in there. That where it looks like it should be moving down again, and then testing 72 with a chance of getting down here at 68, that next weekly support down over there. So that's a look at the weekly and daily, and this is very negative momentum here on the daily, negative momentum here on the weekly. But now what I want to do is give you a little taste of, well, the monthly charts. This is the monthly, and this is just absolutely amazing. And for those of you that are members, I'm going to do a big picture update early in July. where I look at all the monthly charts also on the major indexes. So you'll be able to see how I do a longer term perspective. So you can see in here that you have this average length of each cycle is around 18 months. And when you get into the late stages is where you get the big declines. Here you had a super bullish cycle where it only left a month or two to correct. You can see there, and then it continued to move to the upside. Now, because this came down right over here and tested that low, it said that the next rally was likely to fail in resistance. You can see that it did that. This was the 7th month right over here off of this low. So it meant that getting down here, testing the 78.6%, the next rally would likely fail in resistance, which it did. And then it leaves several months here on the downside. So this coming up here is a pretty risky period. This comes out here in towards November, potentially out to year end, where we're likely to see weakness in the energy market. So that says to me that there's a lot of risk out there. We're getting into, see here, the final 3 months, the final 3 months right there, the final couple of months. And this was just weak for a long period of time. Momentum in here turning down again after trying to get to the upside. And that says to me that the light crude market is likely to move to the downside. Now, there's been some background news in here where they're backing off some of the production cuts from OPEC plus, and also world economies slowing down, U.S. economy likely slowing down, talk about demand pulling back for the energy market. So there's a lot of reasons why, and I kind of talk about that. What's the background that would cause a kind of big decline? This really looks to me like it's headed, well, under that 72 level right over there seems like a layup, as you can see, and then potentially down to this level, 67, cycle low level, 63, 63, and then these supports are in the low 60s and mid 50s. So there is a very risky period ahead for the energy market, and my guess would be that that's reflective of a pretty weak situation for world economies, and the likelihood that you're going to see some sizable moves to the downside in all the energy markets as we see in here. And now with breakdowns going on or weakness coming in a similar time period for the metals markets, it just makes me wonder if commodities are not going to have a temporary pullback for some months before we really start to get a stronger period for the commodity markets on the upside. So this is a pretty negative picture. Again, my entry level is in the mid 75s to high 76s for the short-term trade on the short side right over here, as you see on the daily chart. Momentum negative right over here on the weekly, and what looks to me like a very negative condition as we look at the monthly chart. And again, don't forget, monthly charts, I'll be doing all the major indexes at the beginning of the year. So make sure that you become a premium member to be able to see that video